If you run an HVAC business in Australia, air conditioning installation, servicing, refrigeration, ventilation, you already know that the capital requirements of this trade are significant. A single commercial air conditioning system can cost $30,000 to $80,000 to supply and install. Add your service vehicles, your specialized tools and refrigerant handling equipment, your stock of parts and consumables, and the fact that commercial clients often take 60 to 90 days to pay, and you have a business with real and ongoing cash flow pressure. The good news is that HVAC businesses are well positioned to access finance. You have consistent demand, a clear and demonstrable revenue stream, and a range of loan structures that are purpose built for exactly the kind of capital needs this industry has. Let me run through your main options. The first is equipment and asset finance. If you need to buy a vehicle, a U-Tow, a van, a truck, or a piece of equipment, this is almost always the most cost-effective structure. The asset itself acts as security, which means better rates than an unsecured loan and terms from 1 to 5 years. For HVAC businesses, this is the standard way to finance work vehicles, lifting equipment, pipe threading machines, and other high-value gear. You pay for the asset as it generates revenue, rather than tying up working capital in a large upfront purchase. The second is an unsecured working capital loan. For situations where you need cash quickly to cover materials for a large commercial installation before the client pays, to bridge a payroll gap during a slower month, or to take on a job that requires significant upfront spend, an unsecured loan gives you between $10,000 and $150,000 without needing to put up any asset as security. Approval typically happens within a few hours. Funds can be in your account the same day you sign. Third, if your business regularly invoices commercial clients and waits weeks or months for payment, invoice finance is worth knowing about. You can unlock up to 85% of the value of outstanding invoices immediately. The lender collects from your client when the invoice falls due and charges a fee for the service. It solves your cash flow without adding a traditional loan to your balance sheet. And if you want an ongoing buffer rather than a one-off lump sum, a business line of credit gives you a pre-approved facility you draw on when needed, and you only pay interest on what you have actually used. Here is what most HVAC operators don't know about the approval process. You do not need to own property to borrow up to around $150,000. Non-bank lenders assess your application primarily on your last 3 to 6 months of business bank statements. If your business is generating consistent monthly revenue, the process is fast and straightforward. Standard requirements are an active ABN registered for at least 4 to 6 months, minimum monthly revenue of between $6,000 and $12,000, and Australian residency. No property, no perfect credit score, no business plan required. When comparing loan options, always ask for the total repayment amount expressed in dollars. That is the only number that tells you what the finance actually costs. The link in the description takes you to a free loan comparison tool. 5 minutes, no credit check, multiple lenders at once.